Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, Yatin, TCS numbers have just come out. We will be addressing it in just a bit. But, looking at the market, it was a day of correction. Of course, we've seen US CPI coming in hotter than expected. And on Wednesday, we saw a fair bit of slump on Dow. Correct. Although yesterday, we saw some bit of recovery on the back of a rally in tech shares on Wall Street. But I think we were reacting to those hot CPI numbers today. So 200 points shaved off from the Nifty around that 22,500 mark now, and even the Sensex shaved off over 700 points. Point to note today was the fact that benchmarks were underperforming the broader end of the markets. So the small cap index in fact managed to end the day in the green. But mid-cap index also down by 0.5% or thereabouts, but the benchmarks were down over 1% or so. Sectorally, most of them were, in fact, all of the sectors were in the red, led by, I think FMCG was one of the pockets that didn't do all that well, neither did IT pack. Of course, in anticipation of TCS numbers, IT pack was fairly muted. Breadth was also firmly in favor of losers. So 1:2, that was the NSE advanced decline ratio today. Pharma was, one pocket that was the biggest laggard today, the likes of Sun Pharma, emerging as the top Nifty laggard. Among the Nifty losers, in fact, you had Sun Pharma, Maruti, Titan, Power Grid, Cipla and L&T as well on the back of, target cut by Kotak Institutional. On the flip side, on the gaining end, you had very few stocks today. You could count them on your fingers literally. Divi's Lab, Tata Consumer, Tata Motors, Nestle, Bajaj Auto, these were among the Nifty gainers today. But Yatin, Bharti Hexacom is one stock that deserves mention, because it listed at a solid 30% premium versus expectation of a 15% premium. But Yatin, some of the commodity plays continue to rally given the fact that gold, silver continue to hit fresh highs.
Clearly, we have stocks like Hindustan Zinc, which were gaining, strongly on the Nifty 500. Obviously, we had chemical stocks also making a move. So we had the likes of Vinati Organics, Arkelin Chemicals, all of these stocks up anywhere between 2 to 6%. CDSL and Nuvama, these are the two stocks in the financial space which are doing well. CDSL moved 7% in trade today, whereas Nuvama, which is a wealth management company, moved 5%. What did not do well and saw some profit taking is Policy Bazaar. That stock was down 5%. Sun Pharma Advance, Piramal Pharma were the other pharma stocks which saw cuts of nearly 5% coming in. But Nandita, we have the TCS numbers coming in.
Right.
The street expectation was muted, but I think they have delivered slightly better numbers. Or probably you can say it were largely in line with the street expectations. If you look at the dividend also, that is 28 rupees per share. We have the total revenues coming in at 60,124 crore rupees, largely in line with expectations. Profits coming in at 12,430 crores approximately.
Margin beat, Yatin.
Yeah, margins are also
26% vis-a-vis expectation of 25.3%. So, of course, we will be watching out for the management commentary as to what led to the margin expansion. Of course, a deal ramp up, in terms of BSNL deal plus the Aviva deal that they had won in the last quarter. Those are some factors that are expected to boost, that were expected to boost margins, and that's exactly what has happened. Even the reversal of furloughs and lower attrition. These are some of the factors that may have impacted the margins. Profit, as you mentioned, Yatin, above estimates. Also, the street commentary on hiring will be keenly watched out for, because Moneycontrol had reported that the company has started fresher hiring. Among the first, large cap IT names to start hiring. In fact, they have hired 10,000 freshers already. So, some color on whether or not this indicates that there has been some bit of demand revival or not, given the fact that last quarter the CEO had mentioned that any hiring would mean that we are seeing or we are hiring in anticipation of a recovery in demand. So very crucial to watch out for the commentary on how the demand is panning out, especially now that the US Fed may not look at the June rate cut. Some bit of a color as to how client budgets are looking like for FY25. Also the fact that deal wins, we will wait for that figure, whether it has topped that $10 billion mark or not. It was expected to come in between $7 to $9 billion. That was the guided range. But lots to watch out for from the management commentary, also in terms of the AI deals and how they are looking at some of the ways to ramp up AI as well going forward, Yatin. But aside of that, Yatin, what else do you have on your radar this afternoon?
We have a lot of stocks to talk about. Obviously, chemicals is one space we spoke about 2 days back. But today, if you look at the few new reports which have come in, today we had, one of the marquee brokerages, Jefferies, initiating coverage on Entero Healthcare. Now, Entero recently has come out with an IPO, and Jefferies has initiated a buy with a target of 1510. Obviously, the stock was active on good volumes. Jefferies believes that the healthcare production and distribution channel that Entero has created is quite unique. In fact, the company's wide reach and product offering should lead to a 20% revenue CAGR, and also they expect the organic revenues to grow at a similar pace. Most importantly, over the next 2 financial years, Jefferies believes that Entero can deliver a 44% CAGR in adjusted profits, because as you scale up, as you grow 20-30% moving ahead, that will give an economy of scale and operating leverage benefit. We have brokerage like Jefferies initiating coverage on Entero Health. Stock, as I mentioned, was quite active in trade, and from the current market price, Jefferies is seeing more than 25-30% kind of upside. Watch out for this space.
Right, Yatin, I can see on the CNBC screen as well that the deal TCV has come in at $13.2 billion vis-a-vis $8.1 billion in the last quarter. So we will of course be watching out for what led to this deal TCV, how much of it is new deals, and of course how the book to bill conversion has been for TCS as well. So lots to decode. Of course, we will be getting you live coverage on the TCS presser that happens at 5:30. Before that, we will be getting you a couple of guests, and we will be decoding the numbers for you as well. So don't forget to tune in for that. But the other stock that's on my radar today is L&T. Kotak Institutional has maintained sell call on the stock. It has reduced the target price to 3,100 rupees vis-a-vis 3,753 per share. It says that there are concerns about Saudi Arabia scaling down its spending programs. Of course, at one point we were witnessing a lot of order wins coming in from Saudi, right, for L&T, which is one reason why the stock had seen a fair bit of re-rating. Now, Aramco has reduced its medium-term capex by $50 billion. It has hinted at reaching capex peak rather earlier than what was being expected. Now, there are reports of a significant cut in the scale of the 500 billion NEOM program. There has been a reduction in the target population as well as project length as well. Now, this was the biggest project within Crown Prince Mohammed bin Salman's plans for diversifying the oil dependent economy. Now, by 2030, at one point in time, the government hoped to have 1.5 million residents living in the line that is within NEOM. That's a sprawling futuristic city that it plans to build. But now they have scaled it down to 300,000 residents by that time, that is 2030. Now, of course, the Kotak has maintained that this may not mean that there will be a scale down in the projects that it has already won, but there is some bit of caution when it comes to Saudi projects that will plague L&T. And aside of that, there were other reasons for re-rating of the stock, that is the investment in chip design as well as spruce up in private sector spending as well. But of course, this particular scale down in spends by Saudi could be an overhang for the stock. Of course, stock as such has done pretty well, Yatin, over the last 1 year. I think it has gained somewhere around 60% or thereabouts. But of course, today under some bit of pressure on the back of this Kotak report.
Absolutely, and in general today the market was quite weak. More than 220 points lost on the Nifty, and yes, L&T is one of those high beta stocks which has seen some profit taking, almost 2% down, ending almost at the day's low.
Well then, that was all about the stocks that we had on our radar this afternoon. Of course, as I mentioned, we'll be getting you live coverage on the TCS figures in just about an hour and a half. So don't forget to tune in for that. Of course, also be prepared to listen to what the TCS management has to say about the kind of performance that they have handed in for the fourth quarter. So all that coming up at 5:15 p.m. Don't forget to tune in. But for now, it's a goodbye from me and Yatin. Thanks a lot for watching. Stay tuned for all your other news and updates.